It's pretty obvious, but when you retire, your paychecks go away. And yet you still need an income to pay your bills, buy food, and just live in general. One of the biggest challenges that you have when you retire is to figure out how to create an income in retirement. That's what we're going to talk about on today's show. If we haven't met before, my name is Mike Potter, certified financial planner and professional, and owner of True Wealth Financial. I believe that retirement should be prosperous, enjoyable, and purposeful. But a lot of people struggle with navigating the path into retirement. And that makes sense because retirement is confusing, complex, and just downright challenging. And it's all new to you. This show is dedicated to helping Christians create and optimize a retirement plan so they can retire with confidence. Today, I want to continue our discussion about 5 decisions every retiree will need to make. And that is creating a sustainable retirement income. For a lot of people, this is a struggle. But if you can solve this, it will greatly help you retire with confidence. Creating retirement income essentially is taking your nest egg and turning it into a paycheck or an income. The goal is to create an income, but to do it in a way that also meets 3 other goals. Number 1, it supports your lifestyle. Number 2, it increases over time and acts as a hedge against inflation or future costs that are going to go up. And number 3, it doesn't deplete your assets. Essentially, you don't run out of money. That's what creating a sustainable retirement income is all about. So there's really about 4 different sources that your retirement paycheck or your retirement income could come from. So the first one is work. Now that might sound kind of silly, but for some people, maybe one spouse will retire and the other one will keep working for a little while, or you might go to part-time work, or you might do some consulting for a little bit. We call this human capital. And so while it might not be a traditional 9-to-5 job, there might be other ways where you can earn some income. It might be having some rental income. It might be from a side business you have, things like that. So the first aspect of is some sort of money that you might earn through some sort of work or service, while it might not be your traditional 9-to-5 job that you're retired from. A lot of people refer to this as encore careers. The second source of income is that of social income. So generally, this is fixed income things. So it could be things like Social Security payments, could be things like pensions that were from your employer or previous employer, could be things like annuities that you buy through retirement plans or insurance companies, or you annuitize a pension. It could just be other fixed income, things like some people who were in the military get disability benefits from the VA or Social Security benefits or things like that. It could just be other sources of income that are fixed coming into your household. The third income is what most people think about when think of their retirement income, is your financial assets. So this would be bank accounts, investments accounts, whether it's taxable or tax deferred or tax free. Could be retirement accounts, things like Roth accounts or deferred accounts. Could be things like inheritance. If you inherited money from a parent or aunt, uncle, or windfalls from other sources, these things could be coming in as financial assets to create a sustainable retirement income. The fourth that a lot of people don't think about is as personal use assets, right? Things that you use, but could later or potentially be turned into income. Could be things like property, first or second homes, vacation homes, land that you own. Could be things like cars. Like if you don't work anymore, you might have 3 or 4 cars. You might just be able to get away with one. So selling the car could turn into some income for a period of time. Businesses that you own, structured payouts, revenue streams from other ventures that you might have, things like that. It's really the combination of all 4 sources that you'll pull from and grab and utilize to create a sustainable retirement income. Next, I want to dive into some factors to consider while making this decision. But before that, if you're finding this information informative or helpful, please do me a favor and hit the like button. It's a great way to let me know to do more shows like this, and it's a nice way to say thank you. So as you're going about creating this retirement income, what's some factors that you want to consider? Well, first and foremost is you have to know your numbers. You have to know what your expenses are. what you spend on a normal month-to-month basis, other one-time costs you might have, like property taxes or income taxes or real estate taxes or homeowners insurance, other things like that. You have to know your numbers. You have to know your expenses, the lifestyle you're going to have, where you're going to retire at. Will you change? Like a lot of people move down south to get away from the winters, for example. So like Florida, for example, doesn't have an income tax, right? And what things are going to change when you stop working? A little bit harder to discern because you don't have the experience from a budget perspective, but will your gas go away, right? Your Social Security and Medicare taxes, your FICA taxes are certainly going to go away. So that's money you don't necessarily need. Your commute costs might go away. Eating out might go down because you'll spend more at home. You won't be on the road maybe as much, things like that. So what are your retirement income needs going to be? What are your expenses? When we go through a retirement plan with clients, we call this our needs, wants, and wishes. We're trying to get out of our head what we want our life to look like and what are the associated costs with that. The second factor to consider that's going to really play into a lot of decisions, are you single or are you married? Are you planning for one life or two? Do you have income and assets for one person or income and assets for two people? You have to, now most people, when there's two people, you're going to spend more. One person will spend less. When you have two lives, though, you have to plan for two. All right, so you have to plan for an extended period of time from a longevity perspective, not just for one, but for two lives. And generally speaking, wives outlive husbands, right? Just kind of a general norm. The third thing to consider of that is how much of what we call stable income. It's really that second bucket that we talked about, social income. So how much of that do we have? The more we have of that, the easier this is to plan. The less of that, the less easier it is to plan. You're going to need more in assets to compensate. The idea is that we kind of build this layering structure in of what do we have in social capital that we know is coming in, and then we layer on assets from other places, from those personal use or financial assets. So some people will have very little stable social income. Others will have a lot. Again, some people might have two Social Securities. They might have two pensions. They might have multiple pensions. They might have like military pensions and a retirement pension and a spousal retirement. There might be 5 or 6 different sources of income coming in. So that will have less of a need of financial assets like retirement accounts. Conversely, if you have only one, right, one Social Security coming in, you're going to need more in assets, right? So it's understanding the amount of stable income you have that you'll have in retirement. So what will those numbers look like? What's your Social Security number look like? What's your projected pension amount going to be? Those type of things will help you as you create this retirement income. The opposite also is true. The fourth to consider is how much assets do you actually have? What does your retirement nest egg look like? Again, lot of assets, you can have a lot more spending, right? Less assets, you're going to be a little bit more constrained. If you have more assets, it'll potentially last you a long time. Less assets might not last as long, right? So how much assets do you have? So get a good inventory of what all your holistic accounts look like. How much is in your bank accounts? How much is in your retirement accounts? What other windfalls or things do we have? What personal use assets do we have that we might be able to turn into money in the future? Maybe not today, but in the future. Like I know of a handful of clients that have property that they inherited with siblings that in the future they might be able to sell to account for that. So that's something that would go into that amount of assets that you have. The next factor to consider is really an important one. It's really gets understated in terms of the numbers. A lot of people think numbers, but that is how flexible or fixed do you want your retirement income to be over the scope of retirement? There are some people who they are used to getting paychecks coming in and they don't ever want it to change and they want it to be the same. I want to get paid the 1st and the 15th. I want to get paid the 1st every 2 weeks. And they've lived that way for 40 years and they're very structured. Other people are more dynamic. Like I can take a paycheck this month. I can have nothing for a couple of months. And now I can take another lump sum and they can balance that. So how flexible, how fixed mindset you are will play a big role in this. If you're more fixed mindset, you're going to lend yourself to taking Social Security earlier. You're going to take your pensions as pension amounts rather than lump sum amounts. You might want to be interested in buying an annuity. You'll have less investments because you'll want less investment risk, less flexibility. Conversely, the other person who's more flexible might be willing to delay Social Security. They might take the lump sum from the pensions and invest it and manage it themselves. They might not ever buy an annuity. They might want to have more assets in the market growing, right? So there's this trade-off between fixed amounts and flexibility that both have advantages and both have disadvantages. Really, it's kind of, goes back to know thyself, right? What type of person are you? Not right or wrong, not good or bad, just know the facts about yourself and what you prefer and start to build that into your retirement income. The next thing to consider is that of legacy. Legacy is a fancy word for essentially what do we want to leave to other people at death. Could be children, could be grandchildren, could be organizations, could be entities, could be charities, could be causes, whole bunch of things. Again, where are you on the spectrum of that? If you have no legacy goals, right, then you can spend more, right? There's a movement out there, spend with zero, right? The idea is that you spend down all your assets and your bank account goes zero on the day you die and the check to the funeral home bounces, right? That's kind of the joke, right? So some people, they have a plan for that. Others have the exact opposite, where they want to leave a lot of money at death to children, to grandchildren, to charities, entities. Again, no, not right or wrong, but what are your goals, right? This factors back into your needs, wants, and wishes. The less legacy you're going to have, the more income you're going to be able to spend. You can raise those amounts. The more legacy, desires you have where you want to forego assets and save them for later for others, then the less income you're going to have, right? So it's a trade-off between all of those things. So you want to begin flushing all of those things out, and then you want to test for sustainability, right? So we're trying to create a sustainable retirement income that meets your needs, grows with inflation over time, and that you don't deplete your assets. We do that through two ways. The best way to do that is through software, financial planning software. For example, in my firm, we use Right Capital. You can also do this with net present value calculations in Excel if you know how to do that. This is what we refer to as a feasible retirement plan. A feasible retirement plan is the idea that 70% of the time you will not run out of money, because we can adjust and we can do things to account for that other 30% to minimize that risk. But if you run a plan and 99% chance you're going to run out of money, that's not very sustainable. It's not very feasible. So you want to go back and revisit them. If you don't know what we're talking about from a feasible retirement plan, go back and watch How to Retire with Confidence. It's the idea of maturity models for retirement plans and how your plans should evolve over time. As we conclude today, we talked about creating a sustainable retirement income. We talked about the goal should be to replace your paycheck, but to do it in a way that meets your lifestyle, increases over time, and you don't run out of assets. We talked about the 4 sources of income: human, from work essentially; social, fixed assets; financial, retirement accounts, nest eggs; and personal use. And we unpacked some factors to consider when you're creating that retirement income. Imagine what it'll be like the day you can give your final notice and retire, because you know that you have created a plan to have a sustainable retirement income that supports your lifestyle and your dreams and gives you a reasonable assurance you will not run out of money in retirement. Now, ideally, this should be considered in conjunction with an overall retirement plan. This is the heart of retirement planning. Really, everything else, insurance, investing, estate planning, all that stuff goes around supporting this. If you don't have a retirement plan, I'd recommend a good first step for you would be engage in a true wealth assessment. It's a financial checkup of sorts to determine how retirement ready you are. It'll help you understand where you are holistically, give you access to Right Capital where you can create a sustainable income, and give you a one-page plan of how to improve your journey into retirement. If you already have a retirement plan, a good micro action this week might be to start to revisit what you need on a monthly basis in retirement. It might have been a while, and it might be a good thing to go back and reflect to see the number that we came up with originally, is that still the same given the rise of costs over the last couple of years? Remember, when you retire, your paychecks go away, but you still need an income to pay your bills, buy food, and to just live in general. The way to solve that is to create a sustainable retirement income that will last you a lifetime. I hope this helps you on your path to a prosperous, enjoyable, and purposeful retirement. Till next time. Have a great day. Thanks again for taking the time to watch this week's episode of the True Wealth Financial Show. I encourage you to like, share, and subscribe so you don't miss any future episodes. Additionally, you can find more information on our website at www.truewealth.show. One final note, though, as we wrap up to today's show. While I hope the information was helpful, valuable, and insightful, it's really for information and educational purposes only. Prior to making any decisions or taking any actions, I'd strongly encourage you to talk to your legal, tax, estate, or financial advisor who's familiar with the unique circumstances of your particular personal situation. Thanks again for watching, and until next time, hope you have a great day.